S&P finally makes a higher high. NASDAQ rallies 1.6% ahead of Nvidia's earnings. Stocks in the S&P are back above the 50% level on the 200-day average. The dollar and VIX continue to fall. Nvidia up after hours on a massive blowout. We'll walk through it. We'll talk about which stocks to watch on Nvidia's massive blowout and which stocks might actually come in. The U.S. steel saga and what levels to look for. Are COVID stocks going to rally or are they going to fizzle? We'll walk through this. SOX is up 3%. We have a lot to go over. Let's jump right into it. Hey everybody, welcome back. So Nvidia after hours is running. We're going to walk through this in great detail. I'll tell you what happened, why it's up, and what to look for tomorrow. But before we even get into it, we should focus on the S&P and what is happening after hours. You can see this move right here around 420. We know what that is. It is Nvidia. Why am I showing this? Because that is what one stock can do to the market. It's not the stock that's doing it, it's that the theme is there. I'll explain this in a little bit. But the fact that the theme is there created this massive reversal today in the ES, the S&P futures, and we want to be a party to that for obvious reasons. I say ES, that's what I'm referring to. But you can just see this 1 minute bar that's sitting right in here. I think you should mark those levels and pay attention to them. When you have a move like that, that is algorithms and high frequency traders that are doing a calculation based upon several different factors. I think it's very pertinent that that became a resistance point and then became a support point. Now that support point of 44.65 has not been tested yet, but this is definitely a level that you want to look at. So if we take a look at this for a moment, I really want to hammer this point home with everybody. Put a level there at 44.70, 44.65, 44.465. So we've marked off the bar, and now we're marking off that 44.70 because that's where we're at now. Now watch this. See how they all coincide right there. If we put this on, we are finally going to be above the 12 if we close here, but look what you're running right into. So I'm going to take those levels off. You can always go back and take a snapshot of that. And I do really want to walk through Nvidia and how we planned for it going into this. But if you just kind of mark that off, you'll see that you're really opening right around there. If we get an exact price point on where you're at right now, you're at 4475 and you're opening right on it. So this is pretty interesting and something that I would definitely watch tomorrow. I know a lot of people watch the 9, and I'll just drop a 9 in so that you can look at that really quickly and you can see what it would look like. And you would be above the 9 for the first time since you cracked. You might have a bunch of people that are going to chase that tomorrow. Wow, it's tough getting that one out. And then if you look here at the 5, I think this is really interesting. So if you get rid of the 55 and we get rid of the 22 and we just look at a 5, when was the last time you closed above the 5 on a higher high? Yeah, it hasn't. So this is a pretty good sign. One of the scripts that I wrote for the community and that we use, this is a 3, a 5, and an 8 SMA sitting on a chart on a 15-minute. So I took daily moving averages and then I just overlaid them on a 15-minute so you can kind of watch the world go by. Now what this does is it gives us early indicators because I'm always fighting for inches, right? I mean, it's a game of, it's a game of edge. So if you look right here, pop it up right there. It's what we're trying to do is we're trying to find, edge. And to me, I think that this 3 to 5 cross is something that happened today around 1:30, 2 o'clock. This stuff's really hard to play, guys, when you're facing something like Nvidia that can absolutely move the market. And it's not just that the stock is moving the market, it's that the theme is moving the market, and the theme is certainly intact, which we're going to get into here in great detail. If we take a look at the ES and we look at these levels on the 15-minute, you can see the breakout bar, you can see the retest. I just want to point this out at this time. It's around 6 o'clock when I'm filming this. And we've already gone through the Nvidia conference call, which was excellent. And we will drill into some highlights there. But I think it's really important to note a couple things. I don't have one red bar coming into this. Not one. I don't have anything like that. So all we have is just net buying. Now, I'm explaining this for a reason, because what's going to happen tomorrow morning, and you're going to want to remember this, tomorrow morning they're going to knock us down. They're going to sell it down, and then you're going to see a bid somewhere. And your initial reaction is going to be to feed the beast, right? And that's them trying to get liquidity so that they can get in. Right? There's no way that someone's going to go through what we're about to go through on Nvidia and think that 6 to 12 months it's not going to be higher. And I'm going to walk you through how we mapped it out ahead of time, and we'll get into it. But I really want to hammer that point home. You're going to have a real tough time looking at this and saying, you know what? Yeah, we're definitely going to pull back now. Could we? Sure. Jackson Hole could be a disaster. And I'm not convinced that it's not going to be a disaster. Let's just get to a clean chart. I'm not convinced it's not going to be a disaster. But for tomorrow and the next day, you cannot be looking at technology names right now with this beat on the video that we're about to get into and tell me that we have problems in technology. Some companies are going to have problems in technology, not the ones associated with Nvidia and not the ones that are associated with them building out their systems. That is very clear, and you're going to see it in the upgrades tomorrow. You're going to see target prices raised. So how do we benefit from this? Well, the very first thing we're going to have to see is we're going to have to look at the NASDAQ and just start. And we're going to see some things here. We are above the 12. We are into the 2255 cross. We talked about this level and said, this is where I want to be. We have to get in here. If we get in here, this is the level that I want to watch. That is the level that I would like to watch. So to be abundantly clear, I'm going to watch it. I'm going to get through that level, 15, 30, 40. If you drill into this on the hourly and you walk through this, you can see our levels very, very clearly. And there were certain things I said today in the public pre-market call live. If you don't come to those, you might want to just go through them later in the day. And just, if you can, because there's a lot of information in there and people join, and I don't have all the great ideas. So when people come in that room, they bring their ideas with them. Now, you can kind of see how you fought right here, tried to hold, battled, retested, and then just ripped. What I like about this are a couple things. Number one, you haven't gotten over a higher high yet on the DTL. So you know your exact level that you have to get through, and then you have to keep working your way up. What I would like to see is something like this. Now, you can all see it already, but let's just point it out in case you can't. So here's your left shoulder, here's your head, and here is your right shoulder. And then coming straight across, you should be able to see this neckline, but you have a neckline coming straight across here, right? You can all see that, I'm sure. But then from there again, left shoulder, head, right shoulder. So if that's my neckline coming right in there, and we'll just drop a pin going straight across here so you can see it. And you see how you're above it right now. You're probably going to want to watch 15.1 and make sure that you do not get below that level. You certainly don't want to break out, retest, and then find yourself in a position where you're unable to hold above it. Nobody wants to do that. Nobody wants to be there where you see something like that, right? You definitely don't want to be in that position where you retest and then you wind up going all the way through. What you want to do is you want to retest and then you want to go from there, hold that level right in here, and then from there, if you hold it, you want to go higher. So that's really what you're looking for. You're looking for the retest, and then we'll go from there. And now what we'll do is we'll take a look at this, and we'll try to figure out what is best for us and how to benefit from this. Well, the very first thing we must do is get above the 55 and the 22. It's the very first thing you have to do. You're obviously going to be above the 5. You're obviously going to be above the 9, you're above the 12, so it's clear you're going to be above all those. You can see how you bounced right here. Perfect bounce. I mean, it's really hard to miss this. Perfect bounce off the RSI. Very difficult to miss. It's hard to play that going into earnings because you just don't know. Now, there were some indicators that pointed out that this could take place. We went through some of that. But you just never know how it's going to play out. One of the key indicators that I really wanted people to focus on was stocks above the 200-day moving average, which is right here. This is the symbol for it. Why is this important? If you break this level, you underperform. If you break above it, you are outperform. You will note that the outperformance of the S&P took off and we rocked and rolled as soon as we got above it here, late June. And then when did we crack? You can see when we cracked in March. When was that? Well, that's exactly when we had that key problem with regional banks. Until we broke above it again, we could see even a little performance up here before rolling back down. This is exactly what you want to see. Exactly. So knowing that, I can't stress enough to watch this. And you will get benefit from it just by saying we should outperform, underperform. We're riding the line right now, but I thought this was fascinating. So here's the dollar, and we've been talking about, are we going to break out? Are we not going to break out? Gets above the top of our channel, everyone's convinced, and this is one thing people always ask me, why do you wait for the close before you say something's done? This is why I wait for the close. We're not the only ones that are looking at these levels. So if you think if somebody has money, do you think that they could run it over a core level, lure people in, and then reverse it and use them as, quote, as I used the word yesterday, exit liquidity? Looks to me like that's exactly what somebody did there. Now, you still need to get above this. You still have this, put this in again from yesterday so people get it. You still have a death cross, and the death cross is right here. You're not above it. It's right there. You're still not above it. So the 200 is still resistance. Until that fixes itself, there's no reason to just assume that we're just going to, put a bottom in the dollar. I mean, we're just speculating. It's silly. We don't know if that's going to happen or not, and it's pretty abundantly clear in this case that it's not going to happen. So what's the next move or the next thing for us to look at? Well, we have to look at the dollar. We have to understand where we are. We have to watch the VIX. Okay, VIX is down. Look at that. People always say you don't use moving averages on the VIX. Okay, they say that as it sits here, and I'll just tell you right now, I chart everything. If people don't want to do it, don't chart it. But to me, if I can find out where the median line is, and then whether or not you're getting above or below the median line, or if I can see the slope of a line, why don't I want that advantage? I mean, it just seems silly. It's just a data point. So for me, I think that's somewhat glaring, but people will say it's not. Okay. Either way, since you broke down below it, you have not been above the 200-day moving average. You got right to it and you rejected. Here you are at 16. Now, if you want to get really kind of goofy, you could draw a trend line right here. See if you're going to break that. Every single time that you've broken those, you've come back down and you've retested. Are we going back to 12, 13? We might be. It's one of the reasons why I'm going to say this. I would not be out there trying to buy options in this market tomorrow, because if the VIX implodes tomorrow, it's going to be very difficult to make money on options. And then we will go from there and we will see how this plays out. That is the best way to look at this. I would not put myself in a position where I'm buying the implied volatility. We went through this on Saturday. Remember, all these videos are linked together. 48% we were up in 2 weeks. All that's implied volatility chewing up profit. If the implied volatility comes down and the VIX comes down, well, that's going to be a problem for us if we're out there buying options, because you're buying options into a market that is depleting its volatility. Well, I don't want to be that guy. So in the comments, you can always comment. I was a registered options principal for over a decade. But if you always have comments about options, or if I started to really think about doing an options class or an options course. I mean, free, but I don't know if there's that much demand for it. So you can always comment below and let me know if you think there would be. And then what should I be focused on if I did put together a course like that? You can see how you come right up to that level, but you're going to work that off. So the implied volatility is going to implode. So now we know where we're at there. All right, so let's get to it. Let's talk about Nvidia, and let's talk exactly about what happened here. So every time I have a major event like this, and what we do in the room is we plan for the event, meaning I started yesterday. We were aware of it for weeks, obviously, but we start yesterday mapping it out, looking at key levels, looking for spots. I walked through this level yesterday. I was very clear that this is a pattern that I view as extremely bearish. And when I see it, I get really nervous. These devil horns right here. Now, earnings, anything could happen, as I said. And of course, something did happen. I think it's interesting you're only up 5% after hours with this blowout, but it's retail fighting retail right now after hours. It's certainly not Fidelity in there at 6 o'clock at night trying to get off 1 million shares. I mean, we all know that, hopefully. So it's retail fighting retail in there, so just let them have their way with it. But I'm going to just tell you this ahead of time. I don't see one analyst on the street that's not going to take their numbers up, and we're going to get into this in some pretty decent detail. And I will have a newsletter out. Make sure you get the newsletter, link in description. I'll have a newsletter out about it as well, some of the core concepts that I see developing with it, some of the key notes that I noticed in the conference. So here we are, and to me, that's a double top, has the potential to be a double top. I call these devil horns, and all we did was reject and go sideways into it. You think maybe it's short covering, maybe it's not. All right, so I wind up having a long bias trade going into this evening, even though my bias coming in this morning was, I think we're going to crack. But we started to see buying, and it became increasingly clear that this was not going down. And then some of the trading desks started picking up chatter, and I'll show you that in a moment. But what you want to do is you want to map out your trade, and you want to know exactly what you're looking for. So let me show you this. The purpose of showing you this is to show you how you should be mapping out your trades. Meaning if you have an event, you don't react, you plan. And then with that plan, you make decisions. I got a lot of really good comments about showing this. And since I'm showing, and since I got those comments, I'll show more of this so you can start seeing how my mind works, what I do in the room, what we do in the community, so that you can understand, so you can do this for yourself. So a quarter of three today, we've already gone over this ad nauseum. They were probably sick of me talking about it. But what we're doing here is going through and saying, okay, this is what we have to look for. If Nvidia moves one way or another, AMD is going to move the most. So knowing that, and that's not just me, it's also doing channel checks, looking at what other investment banks are saying. Right? I'm a big believer in listening to what the investment banks are saying, especially on their trading desks, because that's where they see institutional order flow. And I'll get to that in a moment. And that let me know to have a long bias going into this. I'll show you that in a second. But then I want to know the secondary names. Like you can see SMCI, KLIC, LAM, AMAT, Taiwan Semi, obviously they make the chips. SMCI is up about $30 right now after hours. It's actually up on a percentage basis. At one point it was up more than Nvidia, go figure. And then you want to know where you're at. These are the ETFs you could use. If you don't want to be levered, you could do this one, 17% is Nvidia. So what we're doing is we're mapping all these out so you can have all your charts set up before this even comes out, right? So then you know, and then you know what time, you mark what time the release is going to be, right? So what I always am, I am always more prepared than everybody else. I mean, I'm not saying it from an arrogant standpoint, but you always want to be as prepared as you can going into this. We know we're looking for 11 billion, okay? We know that the 209 was the high end, was 213. That was the whisper number. Then this is just the conference call. You want to have access to it ASAP. You want to know what time it is so you can watch the stock move. Remember this statement, conference calls, when they start to get closer to the conference call, stocks always move up, because even if you're short them, people want to tighten because there's uncertainty. If you're long, they still move up. So you always see a long bias going into a conference call, always higher degree of probability. I would say it's got to be over 70, 75% that you go up into a conference call. You can go look at any conference calls and go take a look at that. It's pretty viable. And then these are just notes that I have where I'm using, I have some contacts and I get access to a lot of research that's on the street. So I think these are JP Morgan's notes. And they're talking about what to look for. And I want to know what they're looking for, because what they're going to tell their clients, right? Nvidia needs to hit 12 billion. Well, they did that. And then guide for 13.5. Well, they did that. They got it for 16. And this is what JP Morgan wants to see. The most important is equities has the potential to reignite the AI fuel. So this is what they're telling their clients. And I want to know that. Why do I want to know that? Because they think the same way that I'm thinking, where we're not just looking for Nvidia. They're out there telling their institutional clients that this has the potential to reignite the AI fuel. So then when I come in tomorrow, so I'm already ahead. I already understand how this is going to play out, right? And then we start going through this. They map out their bull and bear case guidance. They're saying there's a 50% chance that guidance is going to be higher. And then they give you what that could be, right? So they're saying it's a coin toss, over 14, under 14. They guide 16. So I don't even have to guess after hours. I'm already mapped out. So the minute that I see 16, I can just print stock. Right? I can just go long because I already know that they're beating the highest estimate on guiding out there now. If I know that, and then I went through, and I think this is important. Let me know in the comments if you find this helpful. But I think that people should understand the amount of time that goes into actually properly planning out a trade. And this is Goldman notes. And what was interesting about Goldman, if you can zoom in on this, the way I have it set up, I can't, was that you were at 2.5 to 1 that people were adding Nvidia this quarter more than any other of the big name stocks. So that lets us know that they're going crazy ahead of the quarter into this. So they're doing their own channel checks, hedge funds are. All right, fast forward. We look at the hedge fund ownerships. We look at 2X as the closest one. Goldman's out there saying, watch these names. Go look at those names after hours. AVGO hit 900. Why is this important? Because if you miss Nvidia and you start running through these charts, you know what you might find? Go look at Microsoft right now. Go look at these charts right now and you will see that these are up. You could already have these all set up hours ahead of time, all your levels marked off, all your alerts set up. So when they go off, boom, 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 you're getting involved where you want to get involved. And you know where you're supposed to be because you know that they already guided higher. So you don't have to guess. You're not waiting for the conference call to see how it goes. You're not waiting to see what Kramer tweets, right? You could care less what somebody's tweeting because you're already mapped out. Now they talk about their flows on their desk. Despite a high degree of crowding, because everyone and their sister's in this trade, what they do is come out. Nvidia remains one of the few thematic plays that's seeing material uplift to numbers in the near term. On expectations for the quarter, we are looking for a solid beat versus guidance of 11 billion. They came in at 16 billion. I can't say it enough. Debate around how upside is needed, the results, reflection, supply environment versus demand side. Meaning, if they don't guide higher, it's probably not on them. It's probably on Taiwan Semi. They addressed that as well in the conference. For guidance, we think investors are looking for 10% sequentially top line over the next 4 quarters. Okay, this is really important. Top 10% sequential. Where'd they come in at? 13. Okay, they came in at 16. Now, this is really where it gets interesting. For me, where it gets interesting. I'll go to this part of it, and then we'll move on. But please comment on this. I think this is very helpful for you to see the amount of time and the timestamps that go into these. So now the next thing we know is, okay, well, what sector are they really focused on? Goldman is focused on 10 billion. All right, stock was at 508. The minute that they printed that they came in at $20 billion instead of $10 billion, you know what happened? Stock went from 508 to 518. If you have this piece of data, you can act on that piece of data. I'll say it again. If you have this piece of data and you have it all mapped out ahead of time, you can act on that piece of data when everyone's trying to figure out why the stock spiked. And then I just have comments. Everything you need to know is above, and then this let me know I was on the right path. Goldman's Prime Desk, that's where all the hedge funds are. Net buyers ahead of the quarter, and they rank the net buyers. So in other words, how crazy are the buyers, right? How aggressive are the buyers? They rank them. Goldman does 1 to 10 on their Prime Desk. Prime means prime brokerage, where they house their assets. They were at a 10 today. So that let you know what they were thinking. Now, they could have been, try not to laugh, they could have been dead wrong, right? They could have been still wrong. And this was my spec play. I have long stock, but this was my spec play. I did close all the other options that I had previously the other day at like 480. And I did spec these today, and I was up in them by the time it already closed. So I'm imagining we'll see what happens tomorrow. You never know with the premiums. They could just evaporate. They'll probably try to open as close to 500 just to mess with people. But I go into it with the premise of going, okay, how much money am I willing to lose overnight? So everything here that I just walked you through is mapped out before that number hits. Everything. I paid $11 for them. So you can see that. And I just put that out there. That's not even an alert. And then I'm just showing charts after hours. And then we just do notes after hours. So we already know that when I type this kind of stuff out, I'll show this. We already know that when I start typing this stuff out, what's going on, right? So when I say crushed, the people that are in the room already know that we're beating. We beat. Earnings crushed. Let's see guidance. They beat the high end on the street. Total crush, all up. 25 billion, gross margins up. Oh my God, 16 billion guidance. That was it. Boom, 3 billion over the highest guidance. It's gone. And you can go look at the timestamp and go look what the stock did. Why was I able to type that fast, and why are those people that are in that room able to move that fast? Because the entire thing is mapped out before it began. Not because we're smart, not because we knew what was going to happen. I had no idea what was going to happen. If I knew exactly what was going to happen, why wouldn't I take every single dollar I have and put it into the stock? Right? It just doesn't make sense. You have to assess probabilities. You analyze, and then you assess what comes out, and you look at movement. And we just watched from here, and then I put some trades out there. So like you could see that you were holding VWAP and things like that, okay? And then you just see the flag, and then I was talking about ES and what was going on, and then you can see Nvidia, and then how it started breaking anchored VWAP, and so you might want to hold off there. Now, please comment on what I just did. It's really important for me. If you find value in that, I will continue to do that so you can see properly how to set up ahead of an earnings play. That's how you set up for an earnings play. Not sitting here and go, I wonder what they're saying on Twitter, or let me jump into this guy's Twitter spaces, right? That's not going to do it. What's going to do it is planned, methodical information and acting on that information. That's what gets you to win. It's called ed, and that's what you're doing, right? That's why the name of the community or the name of the YouTube is Arete Trading. Arete is not my name. Arete means excellence in all things. The name of the group is Alpha Chasers. Alpha means edge. right? So I always laugh because people think Arete is my name. But anyway, so that's where you are with Nvidia. Now, let's take a look. Did any of this play out that way? Okay, so here's SMCI that we just talked about at 297. One you're going to want to watch tomorrow. What's really interesting this evening, about 3 months ago, I said that Apple is going to be replaced by Nvidia, and everyone told me I was crazy. What's down tonight? Why is Apple down and Nvidia up 6%? Okay. They're going to rotate out of Apple, and it's going to be Nvidia. They're going to do to Nvidia what they did to Intel. And Intel's going to be the biggest company in the world. It's not going to happen by Tuesday, but it's going to happen in 3 to 5 years. Just timestamp this. I've seen how this plays out before. It's just a matter of time. You're not going to do 71, 72% gross margins, which is what they're doing, and not have it happen. And it does tell you that the demand for SMCI and their product and supercomputers is going to be through the roof. There's no doubt that this is just going to be an absolute monster trade. Absolute monster trade. And maybe this isn't the worst thing where it's sitting right now. Now, how do you benefit from all this? And we do have some other things I want to go over, but I want to keep this one a little shorter. AVGO, somebody's coming up on deck Thursday. Maybe watch this one. Maybe do yourself a favor and map out this trade, because that's exactly what we're going to do. The same exact way that I just mapped out that Nvidia trade. So you're 100% ready for this. So there's no doubt in your mind that when that data hits, how you're supposed to act based upon the technical analysis. And this falls right into that line again, right? Macro, where are we on the charts? Where are we on the econ data? With the fundamentals come out. We had the whole fundamental set up. Let's go look at the technical chart now and see where we should get in and how we should set up our stop, our target, and go from there. I know my legs are crooked. There you go. And we're back to the stool. See how it all circles? Comes back right around. A couple other names I want to go through here. I just want to go through this HE. I have zero of a position right now, like literally zero of a position. I'm going to hammer one more thing home because I wrote some notes down because I knew that I'd go off on some tangents here. You have to understand they're going to upgrade this stock tomorrow. They're going to raise their target prices again tomorrow. They have to. They are so off on their numbers. Understand, let's be real clear about this. Okay, they were supposed to earn 11. People said there's no way they're going to earn 11. They earned 13.5. They were guiding 13 for last quarter. Okay, for this next quarter coming up, right? Now they're at 16. Okay, this is a $1 trillion company that is growing revenues at 20%. Okay? And it's raising expectations over and over again. There's no way they don't take these numbers up. They have to. Forget about what the stock does tomorrow, right? Most likely, at some point, you probably test this 480 and everybody says it's over and that's the peak. And maybe it is. Maybe it goes sideways for a week. If you listen to what I just said and you do the work on this and you just think about the fact that if you bought this quarter and you held it, you probably outperformed everything else that you just did for the past 3 months. Probably 90% of the people. Keep that in mind. But let's get into some of these other names. So I'm waiting for HE to rally, to get a position off. I don't know that I'm going to be that fortunate. To me, looking at this, I may be acting on this sooner than later. I was hoping for some other kind of rally up to here. It might be time to get involved here. If I can't get above and stay above this close of $12, I might have a problem. If I'm going to break that close of 12, you might be going back to $10 pretty quickly. So this is definitely should be on your radar if you're looking to short or you're looking to get involved. I do think that this has massive problems and will undergo a restructuring of some kind. And I would keep that in mind for sure. But I do want to go through a couple things. X, you're getting more bidders. This was absolutely glaring today. Where do you think you have buyers at? We've been marking these levels off. Right? You have net buyers here at $31. You might want to mark that down. You have net buyers there. So you know that if it pulls back to that level, this is an area that you're going to want to focus on. It doesn't get more obvious that you have net buyers there. I mean, it really doesn't get more obvious that you have somebody that wants to be involved at that level. You came right to it. You bounced off it like a cat in a hot tin roof. So you're going to want to pay attention to that if you're trying to get involved in that. If we take a look at the SOX, people will be saying, well, do I buy the SOX? I don't know that you run into this. I don't know that you run into this. You have to realize something. This was Nvidia. Now we have to get through Jackson Hole. It doesn't mean that Powell's not going to say, well, things are fine because Nvidia crushed. So that's a completely different issue. We go back to our stool. There's 3 legs to it, right? So I don't know that you want to be buying directly into a 22.55 cross. I'm not sure on that, right? Just like I'm going to say that I don't know that you should be buying Nvidia off the open tomorrow. I probably want to see if I can pull back to 480 and get something off, right? I mean, if I open about 510, 520 and I have all those calls and I have a ton of them, I'm just going to blow them out, lock it in, and then just reevaluate on the first tick, just like I did the other day. I'm not going to play games, right? My hope is that it opens higher, but I can hope all I want. You have to play the hand that you're dealt, and we're going to go from there and figure it out. So keep that in mind with the stocks. You're going to open right into this level. People are going to buy SOXL. I don't know that I would do that. I don't know that I'm just going to be blunt. I don't know that I would do that. I do want to go through this, and so people get this. I do not believe for the life of me that we're going to go through something where everyone is running out again and going to BNTX. I talked about these earnings yesterday. It's really important that people get this, and it's really important for me that you comment on tonight's video about this reversal that we're starting to see in the market and me walking you through what I just did in regards to how I mapped out that trade so that we were prepared for when it came out. Now, if you look here and you come across and you see this level right here and you see this doji, right? So you can all see that little doji right there. It is very hard for me to tell you technically that this can't go higher. This can absolutely go higher. You did not fall apart today. You just formed a doji. Dojis are what? Signs of uncertainty. So I'm not going to tell you that this thing's going all the way back up here. But what I am going to tell you by looking at this is that if you get above that doji tomorrow, that you have what I refer to, and there's a 3-bar pattern, and then you could start seeing these kinds of levels like 130, 140, and you could start working your way up to some of this, not on a fundamental basis, but just out of fear of short sellers and their covering. That's it.